traders. This is the second part of the course, of the masterclass of optimization, backtesting, walk forward testing and Monte Carlo analysis, and how you can put an EA together, and after you coded the EA, you pour your ideas, your creativity into a fully automated system. After that, it comes the hard work, because the most time-consuming part of EA trading is actually data analysis, walk forward testing your EA and making sure that it can work on live accounts as well and not just in backtest. It is the most important part. And with this, I don't say that backtesting doesn't work. Backtest results are the #1 advantage to all traders who did extensive walk forward testing, Monte Carlo analysis before they got the backtesting results. Basically, you have a strategy. You do some walk forward testing on it, Monte Carlo analysis. You see that it doesn't work. Therefore, you don't save the backtest results and you don't expect that particular strategy to work on live accounts. And this is why, if you do all the stuff that I am talking about, and you do it for months and researching for new strategies and elements that you can add to your strategy, you have a much higher chance to succeed on live trading accounts with your EA, and you will see how much more realistic your backtest is after you do these steps. In this video, it is the second part, so now I am going to show you optimizations and backtest and walk forward testing as well. In this particular video, I optimized this strategy that I was talking about in the last video, how I fully optimized it based on balance, based on complex criterion marks that I am going to explain to you, and I am going to show you the results, the backtest, and after that I am going to show you the out of sample data test that I will see for the first time as well. And it is going to be an eye-opener for many of you who tried to code EAs, then test them, then put them on live accounts, and they didn't work as they showed in the backtest. And now you will understand how many testings and analysis you have to do before the final backtest that you can rely on, that you can actually analyze when you are trading, that you can take a look at when you are in doubt, and see if the strategy is still in the range of your backtest or not, because you will be getting backtests that are reliable, and that is just so rare in this industry. It is almost non-existent. Of course, this is just the second part, but in my opinion, this part will be crucial. So watch this part before you are going to watch all the other parts of this series that will be approximately 50 parts, because this is just a milestone. Let's start this video.
Hi traders, this is the continuation and the second part of the optimization course, the master class that I decided to record, and it is all about mastering optimization, walk forward testing, Monte Carlo analysis, portfolio analysis, and all the things that you need to not curve fit your EA, because every strategy can be optimized very well and can be basically curve fitted to a certain graph, to a certain chart, a certain data set. And the most important part of EA trading is basically walk forward testing, because if you do that, you eliminate most of the curve fitting part. And I have to tell you, 99% of sellers, developers, either intentionally or in a non-intentional way, they scam traders because they curve fit their EAs to the highest profit. And if you curve fit your EA to the highest profit, what you get is what you want and not what the markets are all about. So you will be getting the perfect chart that you want, and that is a huge disadvantage of the human brain, that you want things, you have bias. And therefore, even if you are a programmer, a developer, most of the time you want something out of your EA, out of your dataset, and therefore you cheat, and that is not a good thing to do, because that way you will never become a profitable trader. You are going to sell algorithms that don't worth anything, and these are all really like, these things are hurting the industry. And I just went ahead and checked MQL5. I love MQL5. I learned most of the programming there about MQL5 language. They have a great database. They have great articles and stuff, and they have some good robots, because, you know, there are, I don't know, tens of thousands of robots there. But the issue is that I just checked the top EAs on the platform, and what I couldn't even laugh. And these are multiple $1,000 EAs, and I saw exactly the same things that I have seen years ago. They are basically scalpers. They have awful risk to reward ratio. They are tested with low quality tick data, and they claim that they are based on AI and ChatGPT and stuff. And if you are a real developer, you can't even laugh at these things, because they are so dumb, and they just trick people into buy these EAs. And of course, after that, you know, they just run with the money, and they don't even really provide support, because they know that they sell something bad. I have to tell you, it is really difficult to sell EAs that are real, that are realistic, because traders don't really want to buy realistic EAs. They like to, and I say like 90% of the traders, of course, you can sell EAs that are quality, high quality, and that are like long-term traders, but you will miss 90% of the markets, because traders don't like reality, basically. They like the 20 and 30% per month results, and the stuff I have seen, the statistics were just insane, like thousands of percents per year. And man, I think if you are a serious trader, you will only watch this video if you are a serious trader, because this video might be not entertaining in a sense that I am not gambling in this video, I am not doing crazy stuff, but I am showing the reality of trading with algorithms, because that is a harsh reality and you have to work months or even years to develop a perfect algorithm depending on your level in programming and data analysis. But it's worth it because you can actually make money with trading algorithms. You just have to really work on your algorithm. And the most important part of it is optimization and backtest, because if you don't do your optimization right, you curve fit your EA, you will see that your EA won't work on real live accounts, and you just won't understand why, and you will give up trading, even though you had a great strategy, but you didn't put enough energy to the data analysis part. That is the most important part of trading algorithms. I already prepared for this video, as it is a second part of this series. I am going to finally start to show you optimizations and walk forward, and as I invented, walk backward testing. It is a really simple concept. As you can see, here is the YouTube strategy that I tested before in the previous video that you can check out if you click on the screen right now. And not just anywhere, but you should click the part of the screen where the video is. Now, this strategy is a very simple moving average gross strategy. And we already did some testing, and it turned out that the best time frame for this strategy is the daily time frame. Now, when I prepared for this video, I was thinking about it, and it is not good. We can't go through this video series with the daily time frame, and I tell you why. Because most traders, and it is completely understandable, they are not patient enough to trade on the daily time frame. And it turned out this strategy, with some optimization, I was doing some testing, Monte Carlo analysis on it. It works great on the daily time frame, but it has like not even one trade in a month on the daily time frame, and that is just too little amount of trades. And I want many traders to watch this video and understand the concepts and how important this is. And if I am doing it with a daily time frame EA with so little amount of trades, it won't work. So I decided that I am going to change this course a little bit, and actually I am going to show you the full process of optimization, walk backwards testing. I am going to show you both on the 1 hour time frame and on the 4 hour time frame. And I think this video will be actually even more valuable this way, because this part is going to show you how you can turn a really bad strategy on a particular time frame to an actually quite decent. In this part, in the following part, I am going to show you the test results that I got from optimizing the EA on the 1 hour time frame and on the 4 hour time frame. First of all, let's start with the 1 hour time frame. I did the following because I didn't want this video to be like 3 hours. My voice is not that entertaining. So I went ahead, and before the video, I ran full optimizations. And I actually ran full optimizations, not just one way, but two ways. I did one full optimization with balance max. It means that the most profitable optimization set is going to be the first one that passes in the optimization. And I did full optimization with the complex criterion max. And as I said it before, it combines all the factors like Sharpe ratio, profit factor, minimum drawdown, maximal balance. It combines them into a perfect harmony. And it is a very important part of this whole series. And this is why I explain it so much in the beginning, because it is really important. Because now we are going to test both ways after full optimizations, because this is what you will be doing with your EA. You are going to do full optimizations on like balance max and complex criterion max. As I said in the previous video, full optimization, most of the time, you don't have to do that because it takes so much time, and full optimization really curve fits an EA. But I still recommend to start with that, because you will understand how you can choose the best parameters, the best optimization sets out of the bunch, and how to choose one that is going to be profitable in the future, because we don't optimize for the past, we optimize for the future. First, we are going to run the max balance optimizations and from the optimization. And this is the highest balance one. Let's see how it performed on the 1 hour time frame. It actually performed pretty well. As you have seen it in the previous video, the 1 hour time frame was very bad. And now it is quite good. How did it happen? Now, you shouldn't believe in these graphs, because these are just most of the time when you run a full optimization and you get these nice looking graphs with like 9% drawdown, like 160% gain in just 2 years. You get a decent profit factor, Sharpe ratio, a great risk to reward ratio, like almost 1 to 2, and you have a great largest profit trade to largest loss trade, so you know your dynamic exit is working. You get all of this and you are pumped, like, man, I am going to be a millionaire from trading because I figured out a great strategy. It is not the case, because we just went ahead and fully optimized this strategy, and of course it is looking great. Every strategy, even the worst strategies, are looking great after a full optimization. And just write this down, because most people don't know this, and this is why they fall for the EAs from all the markets that are basically just selling martingale EAs. Because if I would like add martingale to this strategy, the graph would be the best graph you could ever seen. I could optimize one strategy with martingale for 2 year in a 2-year period, and it would have 1,000,000% gain. And you can see those results when you check out some scalpers backtests when you want to buy them, and after that you run them on your account and they don't work at all. or they blow your account after 2 months. Completely normal. Now, what we can do to check if this is any good? First of all, what I am usually doing is I am going backwards. So this is the period that I optimized the EA on. And I call it walk backwards testing. And in the first period when I am creating my EAs, I am going backwards, and it is just as efficient as going forward. So I could do a test until like 1 year before this date, and I could then run a simple test without optimization on the 1 year. That is the out of sample data. That what we call walk forward testing on out of sample data. But I am going to do that in the more advanced parts of the whole optimization and research process of the EA. First, I am going backwards. That is just as efficient as going forward, just as important. And you can go many years backward and see if your EA is doing any good. Let's do this. So we are going to go backwards. Approximately, we are going to test it on a 1 year period backwards. It wasn't optimized at all. So I am actually very curious. So this is the graph and these are the statistics. Let's see how it compares to the real world, the out of sample data. Actually, it is, I honestly thought it would be worse, because the reality is that it is not completely wasted. It made some profit. It made 10% with 10% drawdown. Now, of course, that is not the best ratio, but we still had a bigger than 1-to-1 risk-reward ratio and a significantly larger profitable trade and loss trade. And I am surprised. I have to say I'm surprised, because it is an out of sample year and the EA didn't look like this, like completely downwards. Okay. So now we are going to go ahead and check the next set of the parameters. Now it was actually the highest balance Euro-USD pair. So now we are going to test the complex max version. And I'm going to show you how it is looking like in the backtest. As you can see, it is smoother than the highest balance one, because all the parameters are more balanced. Like you can already see, the Sharpe ratio is better. It has an overall great ratio and factor balance, and it has a smaller drawdown. It has a really small absolute drawdown. Of course, it has lower profit, but it is completely understandable, because right now we didn't go for the highest profit, but we went for the basically stability. And now I am going to do the same testing method as before, and sometimes there can be like surprises that not the most balanced one will be the winner, but the highest balance one. Let's see. For example, here we had a really nice balance, but if you would, put this strategy on a live account, it is a losing parameter set on out of sample data, because very, very bad factors, negative balance after all, and of course you didn't lose your account. So in the next part, we are going to test the USD and Japanese yen on the same kind of in the same kind of environment. I also have to tell you that in the first part I am going to test two pairs, and that will be the Euro USD and the USD Japanese yen. The videos would be too just too long if I would do it with 3 pairs. It will be already too long, but and let's just test and run it. Let's see how it is looking like. Yeah, it is. It made a good amount of profit with approximately 9% drawdown and great ratios, great risk to reward, more than 1 to 2, great largest profitable trade and largest loss trade ratio. Overall, great stuff. And I don't really like this graph, this chart, but the drawdown is not that high. But still, I would want to have a little bit better, even in real life. Now we are going to test it on out of sample data. I hope it is interesting for you. Now, if it is not interesting for you, I have a bad news. You won't be able to have a winning strategy, because you are going to just optimize your strategy. You will take a look at the backtest, you will like it 100%, and then you are going to put it on live account. You can't do that with yourself. You have to do this, and if it is interesting for you, then there is a huge possibility and you will be profitable. As you can see it here, not that great. Actually, pretty bad. If you compare it to the backtest results, I know it is bad. And actually, if you test your strategies this way and optimize them this way, you will finally understand why you are failing on live accounts and why your EAs look good in backtest. As you can see, there are many things that could be improved on this, with this strategy, like another dynamic exit that can close trades when they are so much high in profit, like this. So, of course, in the more advanced parts of this series, I am going to add more stuff to this strategy, but right now it is just enough. I would say this strategy definitely has some potential. Of course, it is a really simple strategy, and as I told you, I just wanted to showcase how much you can improve a strategy when you are optimizing it the right way. And now we will be checking out the 4-hour time frame one, and it is my favorite time frame, and this is my video series, so I decided that the main time frame of this whole series is going to be the 4-hour time frame, because it is between the 1-hour time frame that is more volatile, and that is not the way I trade, even though I see that this strategy can work good even on out of sample data. That is surprising on the 1-hour time frame, and it is also, you know, between the daily time frame that isn't doing many trades at all. It is great, but it is great for you if you only need 1 trade per month. If you only need 1 trade per month, there are traders like that. Maybe I am closer to those traders than to the 1-hour time frame traders. If you only need that, you can put this strategy on daily time frame. And of course, it is not financial advice, but it can work based on backtest. Now, let's see the 4-hour time frame and how the highest balance one is going to work on the 4-hour time frame. Let's just see. Very smooth, very smooth. Only 4% drawdown. It is a drawdown, that most prop firms allow. Of course, the profit is not enough, but you know, great risk to reward ratio, very good risk to reward ratio, great Sharpe ratio, great profit factor. Now I am really curious how this one is going to work on out of sample data. And I also have to tell you that, of course, it is just the beginning of this series. This series will be going into detail so deep in this topic that you have to watch these videos before, because you won't understand anything if you don't. And we are going to optimize the optimization periods, not just the parameters. So we are going to optimize what are the best ranges to optimize and then test our EAs on. And it is going to be a really interesting part as well. But right now, let's test this. It is, let's say, a break-even, because it made some profit, but that is not significant. It is almost nothing. It kept the risk to reward ratio at a good level. It is actually not that bad. It very well can be that it is just not a good year for this particular currency or with this strategy. But if we have time, I can test it on some other years. But now the complex parameter set on first on the back optimized period. Very interesting how this strategy is working. This is the balanced one. Yeah, it has pretty good ratios. Kind of low drawdown, but higher than the max profit one. It's interesting. Now let's see how it is working on live account, on out of sample data. I would say it won't be too much better, so much better than the previous highest balance optimization, but it is better. It is significantly better in percentage, because it made much more compared to the $18. It is still not much, but we can work with this because it didn't lose money. It kept a good risk to reward ratio, so we can start to work on this, add more elements to the strategy, and it can be very interesting. Now let's see the Euro USD one, highest balance one. Now this part is monotone. It is a monotone part, but if you understand how important it is and you test your strategies and you want to be profitable, when you do this, you know, you are thinking about your Lamborghini and all the stuff that comes with this lifestyle. So I am not about this stuff. I just like to be free. And I like that I don't have a boss and I travel whenever I want to wherever I want. This is all I need. I don't need any Lamborghinis. But if a Lamborghini is your dream, then just think about that. If you do these parts and you spend months to do these parts, you definitely will be closer to your Lamborghini. Now, let's see the statistics. Very good statistics. I like this. Like, this risk to reward ratio is insane. It is completely insane. Man, that is a good risk to reward ratio. Now I am very interested in the out of sample data and how it is going to work. I hope it is going to work well, because it's so good. Yeah, it is pretty good. It is pretty good in my opinion, because because it actually made a decent amount of profit. It is just one pair, so of course the drawdown is too high, but for start it is not bad at all. And the risk to reward ratio remained approximately the same. That one I really like. So I think it has potential, definitely, because in the next video I am going to show you more years. So I am going to do out of sample testing on more years, and you are going to see that good risk to reward ratio strategies can work exceptionally well overall long term. But it is going to be another next video. Now let's see how complex mux on the 4-hour time frame is working out. I am interested. First of all, it is much more balanced. It had a really good run than a drawdown, but the absolute drawdown is pretty low, and the overall drawdown is very low. The risk to reward ratio is not that good, but we have an insanely good, it's surprisingly good win rate, especially in the short trades, but on the long trades as well, compared to the almost 1 to 2 risk to reward ratio. This win rate is unheard of with this risk to reward ratio. So I am really interested in this and how it is going to work on the out of sample data. Let's just see. I am really interested to see this. Let's start with this. What do you think? Yeah, this is when you optimize a strategy and you figure out that it is not working the same way on live account as you thought it will be. And this is an issue for every trader, and this is why you should do these testings. Because just imagine, you created your strategy, you optimized it, it doesn't really take that much, and then you just put it on live account and you run it for a year and you lose a good amount of money, and you don't understand this because you had great statistics. Now this is why some people don't understand why I spend so much time coding an EA, and it is not about the coding part that takes so long. It is about the data analysis. You have to figure out new ways mathematically to optimize your optimizations and your walk forward testing, and use tools like Monte Carlo analysis to see in even more detail what are the best case scenarios and the worst case scenarios of your strategy on live accounts. What is the conclusion of the video? The conclusion of the video is that after you optimize a strategy and you run it on out of sample data, you are going to see how surprising results are. Because sometimes it is completely the opposite as you think. And as I am talking about the conclusion, I am just curious about some random out of sample data testing. It is completely unfair for the strategy to test it on multiple year because I just optimize it on 2-year data. But I am curious because with these kind of risk to reward ratios, sometimes you have surprises even on out of sample data, but sometimes you don't. For example, if you take a look at this, if you would, and this is also how trading is about luck to a certain percent, if you would, put this EA to the markets here, you would lose a bunch of money, here you would be like break even. Here, if you put your EA here and run it, you would make so much money. But here you would lose half. Trading is a very interesting industry for people like myself with hunger for like data. I hope you enjoyed this part of the video. I know it turned out to be quite long. We're just doing some out of sample backtesting, but believe me, this part is just as important as any other part will be, even though it seems like it is a boring one. Go ahead and do this with your strategies. I did this part this way because after I told you about these topics, many traders, maybe I am talking a little bit too advanced at first, and this is why I made this video like showing this stuff actually, because most traders didn't understand what I am talking about, and now you understand and you can go ahead and test your strategies. I recommend to also try out not just the balance max and the complex max optimizations, but all the other ones as well, and try out all these ones on out of sample data after you optimize your EA. And I recommend it because every strategy has a different style, and maybe your strategy will be performing the best if you optimize it based on profit factor max. And this was the second part of the video. Subscribe to the channel because it takes a lot to do these strategies and these videos and to optimize it before. And leave a comment about what you think about this topic, and also like the video. Please like the video, because I never say these things and I didn't have time to watch YouTube videos for years now, and now I just watched a couple of YouTube videos and it is crazy. It changed so much. all the YouTubers are just shouting to your face to subscribe and like, even during the video. I think I will never have the stomach to do this, but at the end of the video where nobody is really watching anymore, I can say these things out loud. So subscribe, smash the like button, go ahead and do some analysis. Ciao.